In this video, we're going to look at something called the Moving Average Convergence Divergence, or MACD for short. It's a very common indicator and is used on the London Stock Exchange, on Yahoo Finance, and on many other websites as well. I use it when I'm looking at stocks and shares on MiniPip, and that's because it helps us determine the bullish or the bearish movement of the stock index or whatever asset it is that I'm looking at. So for the purpose of this video, I'm using IG as the platform provider, and I am looking at the Dow Jones. So to put the MACD on the chart, in the top left hand corner is the indicators tab, and about halfway down in M is the MACD. And it looks a bit like this. So there's 4 key points of information on this chart. You have the MACD line, the signal line, the histogram, and the y-axis, and I will point these out now. So for the purpose of what we're looking at, you can, or just quickly as well, you can customize the way it looks. So in the case of here, the red line is the MACD line. You can change this to yellow or whatever color you want, but for the purpose of how I like it like as I've got it set. So the red line is the MACD line. Okay, the blue line is the signal line. The green and red candlesticks or bars, they are the histogram. And the y-axis here essentially just helps us tell whether we're up or down here as well. So first line to look at is the MACD line, and it's calculated by subtracting the 26 period EMA from a 12 period EMA. Now you can change things and settings, but it is set like this for a reason, and it's because it works. You can mess around and you could change this to 15 or 25 or 50 or whatever, but quite frankly you don't need to do that because it is set like that, and it's set like that because this usually is probably the most successful way of it working. So what you're looking for in the MACD is a crossover in the MACD line and the signal line. Usually when the MACD line turns above the signal line, say for instance like here, that would indicate that the chart is turning positive, or the index or whatever asset is that I'm looking at looks like it's going to turn into a bullish phase. When the MACD turns negative like here, that would indicate that we're going to turn into a bearish phase or a negative phase. Quite often it's not always right, and you'll get this period here where it's very difficult to determine whether it's going to go right or wrong, and that's why it isn't the most reliable technical indicator, but you can just use other indicators with it to help determine the direction, potentially a Bollinger Band or an RSI, and I will have videos on those on my YouTube as well about how they work. So when you're trying to place a trade, what you're looking for on the MACD is simply a way to figure out whether it's worth going long or short on the basis of the signal lines. The histogram here just helps determine that strength of the bullish or the bearish movement. So the bigger the lines, or the bigger the bars, apologies, then the bigger the downtrend. So if we look at this one here, it matches up with this candlestick here, which was a pretty bad day, and you can see that you've got a pretty bad candlestick. As the days have gone on, even though we had a positive day here, you can see that the candlestick was still red, or the bar was still red, and that's because the MACD was essentially saying that we're not quite out of that negative trend just yet. However, when the MACD finally did turn positive on this day here, we finally got those little green bars, which told us that now the momentum is positive and potentially we could go higher. However, it was completely wrong, and then we just completely went down. But even though we had this huge day, you can see here that the candlestick was quite small, and that's because it was at this moment in time when this was happening, it was very difficult for this technical indicator to figure out which way it sort of wants to go. It could have gone up, it could have gone down. So again, another reason why you shouldn't really use it by itself. But let's say you are going to use it by yourself. How would you determine whether to take a trade or not? What you're looking for is simply a crossover from the upside to go long, or a crossover from the downside to go short. So if I was looking at this here, if we look at the chart now, there isn't really a trade to take. However, I would have probably taken a short here. and we try and match that up. I know that this is 2022, so it's 12th of January. This was only a few days ago. That candlestick there would have been your signal to take a short position on the basis of the MACD crossing over. So you would have taken a short position, probably about where it sits at the moment, which is 36,300, and you would have fallen all the way down to about 35,500, which would have been a 700-800 point trade. If you're doing £1 a point, that's a good return, and you could have just done that on the basis of the MACD. At the moment, it looks like it's potentially going to cross over, but it's very difficult to tell at the moment. And even though we have these two candlesticks and we do have this bullish engulfing candlestick here, the MACD is still saying that we could potentially go down and that we are actually still in a bearish trend. So that's, again, another reason why you should probably use something else with it. If he was trying to take a short position, that candlestick here, if I'm right in saying, probably would have been the right candlestick there to take a short position. And again, we would have had 1, 2, 3, 4, 5 days where it would have been pretty tough, and it's difficult to determine whether we could have continued higher. But it was right, and we did continue to fall, and that would have been a great trade to take on the basis of the MACD. You have the histogram, the y-axis here as well, and that just determines the strength of the upside or the downside. So obviously the higher the number, the stronger the strength of the upside, and the lower the number, the stronger the strength of the downside. So say for instance here at the bottom, we can see that we had probably minus 300, just over minus 300, which determined that the strength was really strong in the downtrend. And as you can see, when we got up to here and here, we was trading at 300 and 400 on the y-axis, which would help us determine that the strength is very strong. Apart from that, that's pretty much it, and how you look at the MACD. All it does is help determine whether the direction is bullish or bearish. The best thing to do when if you want to try this out, is just to try it on a practice account and see if it works with your method of trading. If it does, then great, and if it doesn't, then potentially find something else or use it with another technical indicator. Just on a side note, for me personally, when I'm looking at the MACD, I will use either the Bollinger Band or the RSI, which are two other very common indicators, and they'll help me determine whether to go long or short on a trade. So for instance, just hypothetically, what I would look for is you have a crossover in the MACD here, you're positive on the histogram, and you're also in the upper Bollinger Band. If you don't know how Bollinger Band works, there will be a link in the description so you can check that one out. But what you would be looking for is both of these to give a signal that we're going to go up. You've got Bollinger Bands suggesting that we're going to continue higher to the upper band, and you've got MACD also telling you that we've turned into positive momentum. That's what you'd want to be looking for in terms of a trade. I would probably say that these two are the best pair to go together, but that's just my personal preference. Thanks for watching.